Hello, dear traders. I'm Harshal Gandhi and I welcome you to APIxTradeBot.com. In this video, I'm going to just show you some caveats and give you some guidelines before you start running your bots. So, so the first point that we need to ensure is that we do not run the bots which has same legs simultaneously. What I mean by that is you are, let's say, selecting a strategy which has a nifty leg of, let's say, 25,000 call, and you are running the same legs in three bots. Although the strategies might be different, but because there is a common point between these strategies, if there is a point where two of your bots hit at the same price when there is only one opportunity in that one leg, then you are bound to fail in one of the bot, right? You will miss in one of the bot. So you need to ensure that you are never putting yourself in a situation where you are bound to fail in one of the trade bot. So make sure that you are only running, or you are sure that none of the legs within each of your strategy are common at one point. So the second thing is that your bot protects you in a way that if there is low liquidity in any of the leg, the strategy will not execute at all. So let's say, especially in MCX, I have seen, let's say, in silver or in gold, right? The liquidity is not that good as you might see in Sensex or in Nifty. So if, let's say, you are running a strategy which has 10 quantity for gold, any call or put side, right? But if such a situation is there that, although the price is good, you see that, you have said something, you say that I am ready to pay X amount to enter the strategy. You see consistently that that price is coming, that is hitting in the system, but your strategy is never executing. The reason for that might be that, you have put too much quantity in the legs, and the bot is never able to find that quantity to ensure that, yes, if it really executes, all of your legs will execute 100%. So you might get into an infinite loop of, running the price you see is hitting, but your strategy never executes. That is perhaps because liquidity is low and you are trying to do too much at one single point. So make sure that, if such a case is there, you are only doing it with one or two lots per leg, and you can do that 10 times in different bots, one after the other, but not all 10 lots in one single go. The other thing that you need to be aware of is that, you should not push for too much uh, price extremes, right? What I mean by that is, if something has a fair pricing of, let's say, 1000 rupees, you can do an arbitrage between, whatever, maybe future or in the cash segment, but the arbitrage should be in some sufficient limit. If you try to push it too much, the chances are there that, the opportunity might come, but before your bot hits or identifies that pricing and hits the strategy or try to execute the strategy, the price is already gone, and in such a case you will have an unexpected price miss, and that could be huge, or, even beyond the unfair or fair pricing of 1000 rupees. Something that was fairly priced at 1000, the opportunity that you were looking for is 900, which is too much for an example, and, before it tried to fill, it is, you executed it at 1001 or 2 rupees, right? So you will definitely be at a loss in such a case. So don't try to push it too much. Maybe 1000 is can be pushed till maybe 985 or 990, but beyond that I think it will be it might be too much. It depends on what contract or what underlying you are playing with, and what is the market scenario at that point. So lot many things will play into this. You need to have that fair judgment of how much aggressively you can chase the pricing in such a scenario. So don't push it at a limit that there are more chances of failing than passing. The fourth is that you need to maintain sufficient margins at all time. So this is a big point wherein traders fail uh, unnecessarily. Even if there was a good opportunity in the market, there was 100% chance that you could have grabbed it with the bot, but because one of the leg in the strategy failed because of the margin, your entire strategy has failed. The bot will stop to protect your account in such a scenario, and you will have to manually counter it, or execute that leg which has failed, or square off the legs that have executed in the strategy. And you might get also into a situation wherein your one of the position is unhedged. So we need to avoid such scenario. It is better, or it is I would recommend that you maintain at least 20 to 30% buffer above over and above the margin that is required to execute the entire strategy. So what one check that I personally do always is I try to create a basket order for all the legs that are there in my strategy, and check it manually in my account with the broker to see what is the margin requirement that is coming when I try to execute all of these order together. And before I try to run the bot, I make sure that I am at least maintaining 10%, 15% above that particular margin requirement, to ensure that if at all the price is there, my orders get executed successfully. So it's always better to maintain sufficient margins. We don't want to fail unnecessarily. Last thing is that sometimes we are running the trade bots and also doing manual trades, and while doing all of this we create positions in the entire portfolio which are hedged with one and the other legs within within different strategies. So for example, in one of the strategy I might buy a put and a call together. In one other strategy, I might be selling two legs of both call and put. Now, both of these strategies together, because you also bought the legs, uh, it acts as a hedge with the legs that you have sold, right? So, let's say you are trying to square off the sell legs of your strategy with the bot, but or you are vice versa, you are trying to square off the buy positions from your portfolio using the bot. But the scenario might be, if you remove this buy legs, the entire hedge of the sell legs is taken away, and you do not have sufficient margin to cover if the hedge benefit is gone. So in such a case, the broker might not allow to square off the buy positions. So you as a trader will need to ensure to look into your entire portfolio, to check before you start running the bots, that squaring of some of your positions does not result in reducing the margin benefit or hedge benefits of your entire portfolio. So make sure you square off such things first before running your bots. So that's all. I think if you take care of these things, uh, you ensure that your bots will never let you fail. Your bots are designed in a way to compete for the best pricing for you, but provided that you as a trader are ensuring that you do not allow your bots to fail unnecessarily. So you help your bots to success, and they will ensure to get success for you guys in your trading journey. So Just to repeat, don't uh, or avoid same legs conflict between the two, between two or more bots. Run one leg with one bot at a time. Max two or three lots in low liquidity markets, especially in MCX FO segments. uh, do not be pricing aggressively. Do not chase pricing which are way too unfair. You might miss pricing in chasing very aggressively. Maintain sufficient margin buffers. Have at least 10 to 15% additional margin over and above what is required. Check manually into your account before trying to run the bots with all the legs together, and protect your hedge. Do not uh, try to square off the legs, which will remove the edge of your portfolio. Your broker might reject the orders, and your bot will auto stop in such a scenario. So I wish you all the best, happy and safe trading. I do want to see you and continue in your journey, and I wish you all the success in the world. Welcome to APIxTradeBot once again. Thank you.